All right, guys. Welcome to Trendline Break Retest. Pretty much, I'm going to go over how a trend line looks like and how it's supposed to look like when it breaks and retests, especially when you are looking to take a trade. So, especially when you're looking to take a trade, how it's supposed to look like break and retest. As you can see upstairs, up on top, you see the Candlestick Bible, page 61 and 62. Um, you could look at it. It will show you a trend line for a selling market, and you will see a trend line for a buying market. Of course, you already seen on the previous videos of how it's supposed to look like and with the break and retest. So just wanted to go over it again. And at the same time, uh, take a look at it on the Candlestick Bible. Okay, so if you are watching the video on your phone, have the chart open on your computer, on your laptop, and follow along. So you can pause it and edit. Okay, so let's go ahead and get higher highs and higher lows for an uptrend market. Okay, all right. So you guys already know the uptrend market will always give you higher highs and higher lows, and they're not always going to be exactly the same height, but you will notice that market is clearly in the uptrend because of the higher highs and higher lows. No higher lows have been broken. And to reconfirm that uptrend, we are going to have a trend line. Okay. A trend line uh, will at least need to hit at least two areas, like two structure points, two low points, two retracement points, two swinging points. Okay, let's continue. Boom. So as you can see, one hit, one hit, one hit, one hit. So up there, we gotta have a where if possible double top, but that's not what we're looking for. Okay. This is what we're looking for right here. We were looking for market to sell significantly, not just to the trend line. We want market to sell past the trend line and also past the previous low. Okay, last higher low to retest, meaning we want market to break the trend line, okay, and retest this low point right here, okay, um, and then to continue down, okay. So when market does come back to retest, the next high, because that's a low point, right? The next high it gives you, it's going to be a lower high because this high right here is lower than the previous high, and that's how we know that the trend is reversed. Okay. Now you see the zone. So that zone is it's a simple zone. Okay. When market was buying, we was placing a resistance zone up top. So you would have placed a zone like so, like right here. Market breaks above, right? It breaks above, retest, and it bought up, came back, bounced on top of it again, bought up. And this time it didn't bounce on top of it. It broke the zone and retested the zone to fall. Now, at this point, it didn't just break the zone, it also broke the trend line and retested. Okay. Now, just so you guys know, market can break a zone and not retest. Then it's not a break, it's not a break or retest. When it break through and go all the way back up to continue the uptrend, normally it's just it's like normally a stop hunt. I like to call that a slippage. It's just going to the next zone of bounce, go right back up. Okay, so you want a retest off the zone for it to be considered as a true break. Okay. Of course, you do have the little first zone off the top right here. So that's the first low. And this is the second low. So in between it is what I call slippage, meaning market will always retest the low, but a lot of time if there's a low structure that's close to it, it will come back. It will go a bit higher to retest that same low. So this up here is the first low, right? And then this is the second one. So it broke both, and it's not always going to just bounce off this second one right here. A lot of time you'll come back to that very first one off the top that it broke. Okay. Now on top, of course, we got a double top where a sell could have been possible with a legitimate price action, but we prefer to take this right here. But on the H4 is where we're gonna back test. We're gonna look for price action. We're gonna look for the break and retest. A double top price action is just as much as legit as a break and retest. It's just the break and retest. It is the best setup to actually take. Okay. So now, let's see. Change the color real quick. Let's do dark green. Okay. Again, right? Doing the uptrend, market give you higher highs, meaning where this high right here got overwhelmed, and this high right here got overwhelmed. So each high is higher than the previous high, where this one is higher than the previous high, and this one is higher than the previous high. Okay, now this is still a higher high. It just did not break the last previous high. Okay, it does not make this right here a lower low because it never broke to retest. As you can see, it's bouncing off the trend line. And one thing you guys need to understand is that a uptrend with an uptrend trend line is considered as a support. Okay, because it's at the bottom, market is bouncing off of it to go to the top, so it's bouncing off support. Okay, where if you had a trend line, of course, so you see how we got that first right here, one hit, that two hit, right? So this trend line right here would be considered as a resistance because it's on top of the higher high. So with an uptrend, your trend line is considered as a support because that trend line is being respected by the high low. Okay, it's bouncing off the high low, but when the market is selling, it's being respected by the lower high. These high points is going up to hit it, so there's like resistance. Okay, so with the uptrend, this trend line is considered as a support. Just so you know what it's considered as. Okay, don't go crazy about, oh my God, is a trend line support or resistant? No, it's just for uptrend. You just want to make sure market is bouncing off the lows to go to the upside. You need minimum of 2 hit, okay, to go up for it to be a really good zone. Sometimes you may not get a 2 hit. Sometimes you might get just the one. You know, like one right here, like it'll be just one hit, boom. But this is 1, 2, okay. So if you don't count this one as the first hit, like the first line to hit this, that'll be second hit right here. Or if you count this one as the first hit, sometimes you may not get a second and market will come down. Is a perfect example of that, right? Let's do this. So let's just say market did high, low, right? And then high. And in turn, you place a trend line from here to here. Okay, so that's the first hit. But market instead does this, okay, and then fall, right? This will be the area that is considered as being the first hit, right? And where right here will be considered as the second hit. Now, if you saw the first initial, if you saw this one as like, okay, 1 structure point, 2 structure point, and this would have been the third. Okay, so it could be very different. So you could get, okay, so market come, boom, and you saw that as 1, okay, 2, right? Then you would have a trend line like so. Now, what happened if market did this? 1, and run up, right? And then you start a trend line like so, instead of bouncing off of it again, market does this. Okay, so it's still considered as a trend line being broken, because from this point to this point, market was stepping up, right? So it broke the line. It's just not just the line, okay, the trend line. It also broke this last previous higher low to retest it, okay? Now, the market's always going to look very, very much different, okay? Sometimes structure will look like so. Now, the thing about this one is that this low point never got broken, okay? So what you would have to do is just adjust the trend line like so. So if you had it like this originally, all you got to do is run it like this now, okay? Because market is still going up if you pay attention, right? If you pay attention, it's still going up. Boom. Oof. That's slippage. Okay, do that again. Boom. Boom. Okay. Boom. Boom. Okay. It's still stepping up. It's just the structure may not be the way you expect it to be. It's not always going to be perfect like so. Okay. Because sometimes you might get this. Now you see how this is stepping down, and they start doing this. But if you run a trend line off this, right? You're trying to hit the first structure, right? Like this. This is how it looks like, right? Sometimes you would have to readjust, like to this. See that? Or to this one. The idea is no low point no low point ever got broken and retested with the trend line. Okay, because right here is the low, right? You see that? It never broke completely. It never broke completely to retest, meaning like this right here. Market never broke like so and retest, okay? But instead, it bounced off that same area right here. You will be considered as a zone, because if you had a resistance zone starting from here, as you can see, all it did was bounce off of it, okay? And that would be the general idea of the break and retest for a trending market, okay, with the trend line, right? So take a look at the example on the first videos over trend line, where you had an example of the break and retest for the uptrend, and then the break and retest for the downtrend. We could run this again. Clean up real quick. So we had the uptrend. So let us go over the downtrend. It's going to be very simple. It's going to be the same thing. Okay. So let's just say, you know, market is doing this, right? Let's do this. So we run it from one point, right? Just like so. I'm not worried about touching these, but the moment it hit this one, I know I have one hit from that beginning, one hit right here to run it straight. Everything else, we just let the market come towards it. If all this already happened, then I'll have two exact hit, but this right here is also a hit. When we use the line chart, that's how it's going to look like until you put the candle on. You will notice that market give you wicks, okay? You will notice that market give you wicks to respect the area itself, okay? Now you would want a break of this trend line, okay? Remember, a downtrend the trend line will be considered as a resistance because it's bouncing off the lower high. So you would want market to break the line like so, right? Doesn't matter how far it goes. You just want it to break the line. Now, the next thing you need from it is you want market to come back and retest the last structure point. So meaning like that, right? Like the last structure point, like the last lower high for the uptrend, right? So the last lower high. And you want market to sell to come back to the same zone, okay, last structure point zone, and then to buy up like so, right? And your entry area will be right there. So you have a trend line that is broken, right? And you also have a zone point right here that get broken, and it got retested, and you will look for the price action for the buy. Okay, that's all there is to it. There's not much. Okay, it is going to be just that simple. It's going to be just that easy when you are identifying break and retest of structure in the market on the H4, okay, daily. It's a lot easier because each candle will take 4 hours to complete it. So while you're waiting for that candle to be completed, that's 4 hours. You have a lot of work you could do. If you have something to clean, a book to read, okay, like you have something to do. Now you have more than enough time to wait. And not only that, right? When when market does retest and then give you a price action either for the buy or for the sale, right? Once you take that trade, once you take that trade, you have another 4 hours to go chill again and just let it go, just leave it alone. And if the next 4 hour is a candle that goes with your sell, you know you good, because now it would have to take 8 hours, at least 8 hours to go up and take you out, because the first 4 hour went your way in profit. And I mean, the next candle have to reverse, meaning buy up for 4 hours and then another 4, if not more, to go back and wick you out. Okay. At this point right here, this will be considered as a high low, and this will be a higher high. Okay. Very clean and very, very simple. Okay. Very clean, very, very simple. All right, so I'll see you on next setup, next price action. Okay, so just so you know, the price action we'll be looking for on this area would be mainly buying price action. We are talking about either bullish engulfing, okay, or the morning star, or let's do the morning star first. We could do the morning star. You have the bullish Harami, okay, aka the inside bar, okay. Of course, you have what I like to call the Eiffel Tower, aka a tweezer bottom, where the candles look exactly alike, if not, boom. Sometimes it'll be the same height. Remember, they need to engulf a 50% plus, okay, for it to be considered as a tweezer top or tweezer bottom. Okay, but you know, if it does buy up to 50%, you know, you definitely have a bullish harami. Above 50%, you definitely have a tweezer price action, okay, to get you going. So either way, if you know, if you get that 50% in golf, you still fall under the buying price action. Of course, you do have the pin bar, okay, either the dragonfly, okay, or just the pin bar itself. Personally, I put both of them in the same category because they both mean the same thing. It's just one has a bigger body than the next. Okay, so right now we got 1, 2, 3, 4, 5, 6. So from bullish engulfing, Morning Star, bullish harami, tweezer bottom, um, the hammer, and the doji itself, the hammer, the dragonfly. Like I said, I put both of them together. Of course, you do have the actual doji, okay? And we know to trade the doji, it's the next candle that come after it. Let's just say this was the last candle that formed, right? And then you have an doji, right? Remember, the doji is a price action candle that tells you that neither buyers or sellers are in control. It also means continuation of a trend, especially if it's in the middle of the market. And it also means a possible reversal. And the best way to trade that doji is to wait for the next candle to open and close, meaning having a candle like this that opens and closes will give you a bullish momentum to go to the upside. And if you combine the whole 3 candles together, it will be a morning star, okay? Vice versa for the evening star. That's what it becomes. So when you combine it together, it's not just a doji, if it's like a bullish harami, and then, you know, to continue. Sometimes the doji will be like so, or will just be a small body candle, okay? But yeah, with the doji, you definitely need the next candle to be bullish for it to buy. Now, it's not just the next candle to be bullish, it also needs to take 50% of the last bearish candle. The moment it take the 50% of the last bearish candle, we know we have it by momentum power, okay? And it becomes a morning star or evening star, because that's the price action that consists of 4 to 3 candles, mainly 3, okay? The reason why I say 4 to 3 candles, because sometimes it would be like this, right? And then you will need the extra one because it finally engulfed this candle right here, okay? But really consists of 3 candles. All right, I'll see you in part 1 video.